Hello, ladies and gentlemen, and welcome back to another video. First things first, this is not financial advice. This is strictly opinion content, and I am not a licensed financial advisor. With that out of the way and understood, I wanted to go over the exact market mechanics that are behind the fake Beyond Meat short squeeze, which is faker than the meat itself. I want to be crystal clear. This is not a business turnaround story. This is not a GME GameStop style short squeeze from 2021 where the company actually had billions of dollars of revenue coming in quarter after quarter and a narrative in the console cycle and gaming boom that was going on in that time. Beyond Meat, on the other hand, is up a whopping 1,100% in a matter of days with terrible fundamentals, financials, debt, etc., and a product that is no longer selling well. So let's walk through the exact three things that can make up this Wall Street style short squeeze, which has taken the internet by storm. Now, the first part of this Beyond Meat short squeeze, the regulation threshold list. I will read you the exact definition of that in a minute, but you can see this is from NASDAQ. This is the reg show threshold list. And if we scroll down, the ticker BYND is present on the regulation show threshold. The definition of regulation show, or reg show for short, is the following. It's a set of official SEC rules that govern short selling in the U.S. securities market, primarily designed to prevent abusive naked short selling and failure to deliver of shares. Keep that last phrase, failure to deliver, aka FTDs, in mind. We'll get to some eye-popping fails to deliver on this exact security in a minute. But this is a regulation including rules that look for locate standards requiring brokers to verify that a stock can either be borrowed before a short sale and then close out requirements, meaning that in order to get off the reg show threshold list, those fails to deliver have to be cleaned up and the shares have to be delivered to the purchaser that at one point in time tried to buy them, but the shares were then failed. The official fails to deliver on Beyond Meat, and these are published officially twice by the SEC a month. So you'll get kind of laggard data, but you can see the most fails in its entire history happened on September 29th for a total count of 8.7 million shares. Now, what is so notable about 8.7 million shares for $15.9 million on that exact date? Well, at that point in time, that was more than 10% of the entire outstanding amount of shares that Beyond Meat had circulating. But just because that was the most ever on Beyond Meat, it doesn't mean that they haven't been relentlessly failing to deliver this stock. And I'll show you its reg show history. Basically, since 2023, this thing has been on and off reg show like clockwork. The estimated number of times it's been on and off is between 6 to 8 over that span. So the fails to deliver, you can see the graph here. And if you ignore this massive one here, you can see all of the amount of fails in September of 2025, in June of 2025, a huge pocket in May of 2025, February and March of 2025. It just keeps going. Look at the amount of fails. It is relentless. So people are punching in orders. Institutions are punching in orders at interesting times. Like here in 2024 was particularly interesting. And all that you had going on was the market makers not being able to deliver the shares from orders over and over and over again. So this is a heavily shorted security, but reg show to me is a higher degree and a better metric of a potential short squeeze. And I'm not saying it's a guarantee. There's been other instances of this. Wolf Speed, actually, we can pull that up too. I recently had one. Let's focus on Beyond Meat though. On and off reg show, let's look at the exact amount of times. Okay, so a little bit of comedy here, but since 2023, Beyond Meat has appeared on the regulation show threshold list multiple times. Early 2023, first quarter to spring, multiple appearances during massive FTD fails to deliver clusters, which I just showed you. mid 2023 again, recurring through late 2023. So it might even be more than 6 to 8 times. Early to mid 2024, again, where I show you the massive graphs. And then here's where it gets really interesting: September 2025, and then most recently on October 20, as they're trying to control the short squeeze. So let me just pull up the chart and kind of show you what this looks like. And you might be thinking, oh, this thing is heading straight down, and it is. But here you go. So look at this high period of shorting here. This is just an example. Okay, you have a huge window of shorting here, just consistent dumping for 57 bars, or around 80 trading days, right? Or calendar days. Then what happens? Okay, well, in order to get off reg show, you got to bop in a big order. Then you get a huge 97% run up from the bottom. That's not because everyone's all of a sudden going long and the company's turning around. In fact, it's not, and its financials look worse than ever. But this happens repeatedly on this security. Here's another great example. Look at this period here in 2024 when it was on reg show, consistent shorting down over 57 days, 40 trading days. What happens then? You got to clean it up. You got to get it off reg show. Bop in a huge order. Settlement wise, it pops off for 75% to the upside. Now, this you can see on the chart. I don't need to keep doing this over and over and over and over ad nauseum, all the way until you finally have too much pressure in the system, which we'll get to as our next point soon. But you can see the amount of relentless failing to deliver by Wall Street. Short interest is rising, and I will pull that chart up to now. So one of the first things you might say is, oh, the short interest is super high and this, that, and the other. It is. But in the case of Beyond Meat, if you can read a balance sheet, if you can read financials and understand debt and what makes a company sound and solid and secure, anybody and their mother would be short Beyond. And now, I'm not saying I agree with short sellers. I think the entire ethos of short sellers is questionable. To quote GameStop CEO and chairman Ryan Cohen, I think it's un-American to short a business. Now, in the case of fake meat, don't ask me my personal opinion. I think it's a questionable product at best. But even if you like the product, their financials are horrifying. You can see in the orange there, the Beyond Meat percentage short increase is well on its way up in a very short amount of time. This is from Ortex, a very, very reputable source. And then the GME one was a bit more sustained and very vertically increasing. So you are seeing that comparison being thrown around to GME. However, GameStop was a much different business with actual catalysts, no pun intended there, for Roaring Kitty going on. But they did share one very commonality, which was massive orders being punched in around times of high shorting. Very coincidentally, before going on reg show, and this is point number 2 of what makes a short squeeze and the Beyond Meat short squeeze explained, is a Schedule 13D filed from a massive share purchase of Beyond Meat Inc. by Unprocessed Foods LLC. Hilarious LLC name. I actually did some digging into them. Let's not even go down that rabbit hole today, but of course they're based out of Wyoming, very advantageous there. But they bopped in an order for 9.5 million shares when Beyond Meat's outstanding was still at 77 million. So very low float. Now we'll get into the debt restructuring, the convert bond restructuring where they massively diluted recently. We'll get to that. But this is just a recent September of 2025 order for 12.5% ownership of the company. Bopped in a huge order. Days later, weeks later, Beyond Meat goes on reg show. So you come in, and this is exactly what happened in 2020. Ryan Cohen bops in multiple massive orders on GME. The stock does not run right away. They internalize the orders. They do not go to lit market, which means it would affect price. They instead route them through dark pools or other mechanisms, or they fail to trade. It creates a settlement delay. And then, of course, you see how many shares pop up on fails to deliver. On September 29th, you see 8.736 million shares failed to deliver just a week or two later. I'm not saying they're perfectly related, but you can tell if there is significantly high short interest, if bears are trying to run this company into bankruptcy, and then someone comes along and bops in a huge order, market makers sometimes can't deliver that order and end up failing the entire or a large portion of said trade, which then causes the stock to go on reg show and forced settlement kicks in, meaning they have to deliver and buy those shares when that order was bopped in. Now let's go and look at potentially what price Beyond Meat was around that time. September 15th was or September 18th was the filing. So anywhere around here when Beyond Meat was in the kind of high $2 range, they could have bopped in that order. And funny enough, you don't see any volume here that matches a 9 million share order. Of course you don't. It's internalized. Then you get more action around here. All of a sudden, huge volume on September 29 when they had the fails to deliver to clean up. And the rest is history. Now, if you're just reading the mainstream media, they're not going to mention regulation show. They're not going to mention fails to deliver. They're not going to touch any of that. They're going to blame retail traders. And coincidentally, there is a guy now that they're comparing to Roaring Kitty named Dmitry Semenichkin. Sorry if I butchered that there, but he goes by Capyberry Stocks, I believe, on Reddit. He went massively long, bought a sizable position in Beyond Meat, I believe around 4% of the company. So this is from Business Insider, and this is the Capyberry Stocks guy, and they're already comparing him to Keith Gill, aka Roaring Kitty, which I think is egregious. But you can see he's a real estate developer. He lives in Dubai. He makes some Reddit post where he purchased 3.1 million shares on October 14th. Now remember that day. That is a critical day. It's the day after a massive debt refinancing and share dilution, which we'll get to in a second. So he comes in, bops in another huge order and goes, at that current price that I bought in, and I'm quoting him, the pricing was just way too low for what was happening. It was a very straightforward that it shouldn't be trading at that price. I mean, you couldn't have a more generic quote about a failing company. That is not a deep value play, and we'll get to why for our third point next. So he creates this weird post, whatever. It talks about the debt refinancing with the converts. We'll get to that in a minute, like I said. But he sees this being buying time to either grow or for the company to be acquired, and is not concerned about reports of declining demand for fake meat. So he's literally, this is where the comparison to GameStop ends. He's literally saying, I'm ignoring declining sales, where GameStop, the whole Keith Gill Roaring Kitty situation, if you remember, was increasing sales and saying this is a deep value investment because we're in the midst of a 2020 and 2021 console cycle where gaming was undergoing a huge boom. So this kind of reeks to high heaven. It's definitely a convenient time that he bought in and posted this. And I'm not knocking the guy. I mean, more power to him. I think that, if you do aggressively trade this way and this, he really saw something here. He was, if anything, he probably saw a reg show and fails to deliver, but we'll just believe at surface value this happened. So you have another huge order coming in now, and one more that I will tell you why is extremely interesting. So another Business Insider article here, but the MEME ETF, literally the ticker is MEME, MEME ETF, bopped in an order for close to 1 million shares on Monday. So you can see here, Monday, October 25, when the stock was still in the dollar range, $1.50-ish range, they bop in an order for almost 1 million shares. And this is a significant aspect of why I think Beyond Meat will not keep going up in price. Not only, let's just throw fundamentals out of the window. I mean, I can pull up a quick earnings report here and just show you how much the company's declining. Boom, revenue miss, earnings per share miss. Boom, big revenue miss, massive earnings per share miss. Boom. Okay, a little bit of revenue, but 75 million revenue. That is nothing. That is nothing if you're comparing this to GameStop. So the ETF, however, what is interesting about the mechanisms of an ETF in a short squeeze? Well, when you have an ETF, like MEME. They punch in an order. They now have 1 point something million shares, or a little bit less, 970,000-ish shares of Beyond Meat. Borrowers and short sellers of Beyond Meat stock can now borrow MEME ETF shares to gain access to the underlying. This is well within SEC rules, which in this case is Beyond Meat. Very convenient way for people that are short Beyond Meat to now borrow ETF shares. Here you can see Round Hill Meme. This is the official LEN pool. This is how people borrow securities. Their borrow fee is astronomical, 140% with a minus 130% rebate. That is massive. You can tell that because they have Beyond shares, there are people, we're not going to say institutions or whomever is doing it, that's beside the point, does not matter. They are borrowing shares of this ETF now, and they will be cleaning up and closing fails to deliver with borrowed shares from the ETF. That is why I think this short squeeze is DOA, because they're now going to be adding these to ETFs. You can go into ETFs, grab the underlying, clean up the fails to deliver. It'll come off Reg Show, all neat and tidy on paper, all by SEC rules, and we'll be moving on to the next fake short squeeze. The last part of this and the short squeeze mechanics, which is just so funny to me, is that on October 13th, remember, this is one day before Capillary Stocks, random guy from Dubai, bops in an order for 4% of the outstanding. One day prior, read this release from Beyond Meat. This is absolutely staggering. Beyond Meat announces early tender results and early settlement for exchange offer and consent solicitation with respect to its convertible notes. So if you don't know what convertible notes are, it's essentially a form of stock dilution where bond desks and bond traders will buy the corporate bond offering for the right to have shares by a certain expiration date. In this case, the original convert offering was for 2027 expiry. That's a way for Beyond Meat as a company to get some refinance their debt or get some financial security in the meantime for the exchange of shares at a later date via convertible notes. Now, interesting here and very funny. They refinance these. So let's read the exact mechanics here. To exchange any and all of its 0% convertible notes due, like I said, in 2027 for a pro rata portion of up to $202.5 million in aggregate principal of its new 7% convert senior notes due 2030. So what did they do? Before we get to the most hilarious thing in the world, they basically bought themselves 3 years of time. So someone comes in and says, okay, let's extend these 3 years. You basically have 3 more years runway as a company from 2027 now to 2030 to figure out how to make more money, to improve your revenue, and to provide shareholders with more value, which I don't think they're providing much of at this minute. That's neither here nor there. And then the kicker, the coup de grace, the moment we've all been waiting for, they diluted another 326 million shares, which is a 315% increase in shares outstanding. This short squeeze is dead. It's over. It's not happening. That is just my opinion, but this is backed up by the fact that they just diluted a few weeks ago another close to 330 million shares to their float. They went from a 77 million float, which is very low. Easy to short squeeze that if you bop in a big order like I showed, and then you go on Reg Show, boom, bang, bang. The rest is history. Now their float is increased by 315%. Now, that is ignoring the outlook and valuation, which there's a great piece on Seeking Alpha about this. It shows how badly the business is struggling. Look at the declining revenues here. Okay, you've got 464 million in the peak in 2021 when there was all that publicity for, oh my gosh, meat alternatives and being vegan's cool, until everyone realized it was just not. Down to 326 million in 2024. That is a significant decline. Look at their cash flows. Same type of story here. Warning signs were always present. Beyond Meat did not get better with scale. In fact, the cash burn got worse and worse and worse. They've had over $1 billion in debt since 2021. And look at their balance sheet. The thing is a disaster. It's so funny when these mainstream media people come out and say, oh, the short squeeze, this and that. if you can read a balance sheet, you can see for yourself, this is not a turnaround story. This is market mechanics, and it is perfectly backed up by their failing business. The GameStop story was entirely different. You had Ryan Cohen going from a passive to activist investor in GameStop, bopping in massive orders, forcing his way basically onto the board. The next thing is history, goes on Reg Show, Roaring Kitties all in with YOLO options. The thing squeezes. They clean up the fails to deliver from the settlement that was never, ever hit lit market in December when Ryan Cohen did that. Beyond Meat, similar story with bopping in big orders, but now they have diluted. This thing is DOA. It's a perfect excuse for market makers to clean all the legacy failed trades, special trades, okay? All of those fails to deliver cleaned up in one fell swoop. You have the mainstream media in your pocket to say, oh, this is all above board and it's a great turnaround story. It's not a turnaround story. It's a failing company. Don't fall for it. Those are the exact mechanisms. I hope you enjoyed the video. Leave a like, subscribe, all the rest of the things. Leave a comment about what you think about this situation and how it's definitely not like GameStop. But if you disagree, let me know too. Oh, and I did want to clarify one more thing. This is kind of like a PS at the end of a love letter here to you guys. But once you do, and I did want to say one other critical mechanic to a short squeeze is the options environment and delta hedging, gamma. Okay, let's get in, and I'm not going to go into the specifics of this. It would be a whole lengthy video, but the unusual options activity, which I have up here from Unusual Whales, a bunch of big orders, options orders being bopped in from the floor of the stock exchange, a lot of big calls coming in. This is all real. And then when this happens and you have settlement coming in from obligations from Reg Show, as price appreciates and you have massive orders coming in, you have fails to deliver in the $2.50, $3 range being cleaned up from before, these are hitting calls. These are hitting sold puts. These are hitting calls. This is creating gamma. Gamma stair steps over prices when it gets above $3.50. Market makers, dealers, options dealers have to hedge the calls and puts that they sold by buying shares of the underlying. It goes through 450. Same thing. It's a stair step. It's called a gamma ramp. It's hitting gamma. So this is another factor, undeniable so, of a short squeeze. It doesn't mean, though, that Beyond Meat is some great deep value turnaround story. It's simply one of the mechanics that are critical to a short squeeze, which I personally think is ridiculous. I mean, yeah, it's always nice for people to make a quick buck, but this is far beyond that. This is extremely beyond good pun there, dangerous, and I personally think it's all fake, just like the meat.